the fear gauge, according to many, looking relatively flat, stable at that 19 mark. But is it still a reliable indicator, or is it an unreliable narrator as to market sentiment? Joining us now to discuss all things VIX and a little bit more, very pleased to be able to welcome Mish. She's Director of Trading and Research and Education of MarketGauge.com. Mish, as always, thanks so much for joining us. Now, to basically set up this argument in a sense, in terms of the VIX, we've got so much cash that's sitting on the sidelines that doesn't need to be buying downside protection. We have the rise of the 0 DTE, the 1 DTE. You look at the forward curve on the VIX and there is some indication that at least, some of that downside protection is in play for August, September, October and the like. So how much can we realistically draw from the VIX? Because it often gets said that this is the true indicator of market sentiment, but realistically, isn't it operating on a much shorter duration in a sense? Because if you're trying to track 30 days and you don't actually have the open interest because everyone's trading on the ultra short contracts that expire day by day, how can we technically use it as anything of anything right now?
Well, that's a really good question. And actually, I'd say my worst trade of 2023 was trying to buy the VIX. So, and clearly, even when we've had some downturns, you've gotten a little bit of move up in the VIX, but it hasn't been the most reliable indicator. But that doesn't necessarily mean it will stay that way, because there is still, as we've started this year, we did see a couple of spikes in March. So we know it has the potential to go when people don't know where else to go. But right now, the complacency in the U.S. market based on this tech run and hope that the Fed is going to pivot and hope that inflation has peaked and hope that geopolitics are going to calm down, hope, has led to a lack of fear. But we know hope, fear, and greed kind of work together. So I wouldn't rule it out completely.
As far as the VIX futures contracts are concerned, it seems like the market is a little more wary about what happens in the back half of this year to the markets and to the fear gauge. Do you worry that all that's playing out in terms of policy action or inaction or overaction will bring about more volatility in the second half of this year? And that's when we will see pressure for the markets?
Yes, I do. However, I don't know if we necessarily will see the great collapse that many people are calling for, because we've been holding up pretty well in terms of all the recession fears and all the bad news have come out, including the banking crisis that we just had. But when I wrote an outlook for 2023, and one of the things I featured was that volatility could actually indeed pick up in volatility, if you will. So I would say definitely keep an eye on it. And I would certainly be looking at these business cycles that we're in right now, which is showing that we're in stagnation, the only area of expansion being tech. And we know that could be very, very short-lived if it looks around and realizes the rest of the market isn't exactly following.
So how do equity markets hold up in that kind of respect? Because the concentration risk that I'm seeing right now in terms of the excessive money coming into tech, that cannot hold. That cannot hold if everything else plays out the way that it is. So by the end of the year, are you thinking we're sideways, we're 36, we're 32?
In terms of the VIX number, you mean?
Oh, no, S&P 500.
Oh, yes, okay.
That's Will's short form.
Well, my prediction was exactly so far what's happened in terms of the highs. I was looking for 4,200 in SPX, so we got to 418. All right, close enough. And I'm looking for 3,200 on the downside. And the reason is because there is a key 6 to 7 year business cycle average down there at 3,200. If we broke that, then I think it would be too depressing to even think about. But I think it could hold because I think we'll see values. By when?
Yeah.
Well, there's so many X factors. I think the dollar could be a big factor. I think that they're certainly having a lot of buzz around still with Russia, and now all of a sudden they're claiming that they can make their nuclear missile sites without even telling the United States. Certainly we have some internal issues here with debt and debt ceiling coming up. So I can't exactly say when, but I do believe that as we get more and more complacent and we hear more and more analysts say, oh, NASDAQ's back in a bull market, the more dangerous it becomes to have a big sell-off. So cash on the sidelines, all of a sudden you'll see a lot more exit in terms of anybody that's in the markets right now. And there's still a lot of money in the market.